Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, August 17th, 2022. I am Frank Ochoa, aka PivotBoss. We have seen quite the expansion phase here out of the narrow range, which began last week, the breakout. We've seen a continuation day over day with higher highs, higher lows, and we hit the 200-day moving average right at the 43.27 half level. That's the first time we've hit that moving average since it went offered right here. That was a retest. So it went offered, it was holding above it here, it dropped below it, it came back, retested there, and ever since that day we dropped to new lows. We've now come all the way back up, hit it yesterday, and are backing off at the moment. This could be just another countertrend pullback ahead of a continuation higher, or it could be a bigger rejection that leads to kind of a market structure retest down below. Right now, one thing we've seen especially in Q3 and since July, is that the down days have been rather muted. What I mean by that is they're not a significant elongated down days that's trigger additional down days, right? They're not these big sell-off days, these big reversals that we've seen. Instead, these down days have been within range, which means when this thing goes up, it's already established a range, it pulls back and it's within range. Right now, that's kind of what's happening. We've rallied, here's your 2-day move, and it's pulled back and it's still within range. Now, if this thing were to break 42.50 here and really elongate, that would be different. That would be a change of personality than what we've seen here on the way up. So right now, the short-term trend is still bullish until proven otherwise, but clearly we're bumping up against longer-term overhead resistance. If you look at across these highs, you have yourself a nice trend line that comes across the highs. That could be seen as resistance. The 200-day could become resistance, and we could see some sort of pullback, perhaps back toward 41.25, 41.50. That's a major market structure edge. Recently, it was taken bid. Perhaps we come back for a big test at that area. So we'll see how much of a pullback we get. As of right now, from an intraday perspective, keep an eye on the previous session's low. If price starts to pop back above 42.78, that could open up a rejection that leads to strength up ahead. Any failure to get back above that zone and you start working down toward the 8-period average down below, that's 42.36 and into prices below it. And again, given the uptrending price action, any push into this bullish PEMA trigger zone could still offer an opportunity for another round of strength ahead. If we take a look here at the NQ, this one here led some of the weakness yesterday, still was able to rally to new highs on the by the end of the day, but again, pulling back within range right now. Very similar to the ES, this thing's been very bullish, and when it's had pullbacks, they've been mostly muted, mostly range-bound pullbacks, range-bound pullback. This thing pulled back within range a bit, and this was the initial retest and go. So we're seeing much of the same. Right now is a pullback day a bit, but we're still within this developing 3-day range. We're still very firmly within that bullish trend right now. Keep in mind this 8-period average right here is very important. Weekly VWAP, very important. If price drops below that zone, will we begin to see another opportunity for a buy the dip and a reversal to new highs? That's what we've seen each of these last few times here. We've seen that type of move. At some point, that pattern may cease to play out, but at the same time, we have market structure down below. That could provide some tremendous support. So looking at 13K, for example, if we pull back deeper and into 13K, this is a big-time market structure zone that bulls need to keep bid. Otherwise, you fail at 13 and you start to open up a return back to 12 and perhaps even prior lows. So again, big-time market structure at 13 if this pullback becomes a bigger pullback. If we take a look here at crude oil, right now crude oil is below the previous week's low. It's been trying to reject that level for the first 3 days of the week. Monday's reaction was decent Tuesday's reaction was okay until it closed back below it by the end of the day, and right now struggling to stay above the previous week's low. That's this price right here, and a failure there starts to open up expansion. For the most part, we could be looking at expansion to the 50% extension. That could be around 83. If we look at market structure edge, that could be around 75. And we mentioned before, right here, this is the January FOMC key level. That's 87.22, and that's a major edge right there. If price can't hold the 87.22s, you will start to walk back that movement all the way through the January range, which takes you basically to the low of the year here at around 75. So if there's a failure at 87.22, we may see this thing continue to extend this down move for a while. You can see how clear the downtrend has been, continuing to see sell signals fire day over day. Downtrending price action here still intact, and a failure to really get going to the upside. Additionally, the 200-day moving average right here, it sat on it, it gave it up, the retest was offered, and now it appears as though we are likely going to make another move within this downtrending channel. So the downside targets ahead could be as low as 75s. If we take a look here at Bitcoin, Bitcoin's down about 1.25% right now. Recall, this one hasn't really been one that has bounced back tremendously. There's been a decent move. This bounce is about as good as it gets so far for Bitcoin here in a long while. But we really need to get above that 25.3 zone. So this pivot low right there matches up with the pivot high a couple of days ago. That's the zone to break through in order to open up the next 5,000 to 8,000 points, right? A move back into, say, 32K and the top end of this market structure. Until then, if there's a rejection here, we could still continue to rotate back down. Again, this has been a decent little recovery and turnaround, but it really needs above 25 in order to really open up that upside up ahead, at least from a medium-term perspective. Taking a look at ETH, this one has been much more bullish, much more bullish. This thing has developed a very nice edge here. You can see the prior market structure down here, a nice recovery and a push higher, holding this edge right here and then continuing to extend this move up. Not quite getting to the top end around 2150 to 22, but still working its way. At the moment, this thing is seeing a failed new high and a strong intraday rejection. This rejection right here also follows the one from a couple of days ago. You know, intraday, that was significant as well. This could be an indication that a bit more of a pullback is coming. Again, we're still in a very clear uptrending market. After pullbacks, there's been a tendency to see another swing move up. Right now, we may be looking at a bit more weakness on a near-term basis into the bullish PEMA trigger zone below. That has been bid each of the last several times we've seen a test. So again, anything below 1800 could be an opportunity to watch for rejection and a subsequent turnaround back towards, say, 2150 to 2200. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.